going to be talking about GTC, Good-Til-Cancel. There's three things that we need to know. One is to enter the trade. Two is when exiting the trade for a target. And three is canceling a trade if a GTC doesn't get filled. By now, we all know the setup. Big pump up into resistance, channel or resistance box, then a big sell off. With that in mind, let's go through these 5 steps. Pre-market search. Then we're going to find the price that the stock is opening at. We're going to try to match our break even with that stock price. We're looking for a 1-to-1 ratio, risk to reward, and we're going to put our GTC in place so we can walk away from the trade. And here's a great tool on TradingView, US stock market, top gainers. When you get home from work, click on the percent changes, look for the stocks over $30 and percentages over 5%. With big volume, this will help you be able to enter into the trade. All right, here we are on Riot. You can see resistance, 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 but it broke out. So now we're looking for another resistance zone, and we see this right here, price bouncing up. And we also see price going down from this point. So we can see that $45 is the top of that zone. High probability is price will probably come into that zone and then sell off. Retesting this old resistance becomes new support. So we're comfortable taking a trade here. So go to Riot, sell calls. Because we're selling the news, you're going to go to your zone price for a strike price. In this case, we're going to sell the 44 calls and we're going to purchase the $45 calls, which will give us a break even of $44.35, a little bit lower than where we wanted. So we're going to raise the price up to 50 cents, and it increases us closer to that high side of the range box, $44.50. With a 1-to-1 trade, $50 risk to $50 reward. If you like that trade, it's set at a limit order, means it has to be 50 cents, and you'll want to change this day to GTC. And you should see it in the order. So this will sit until Good-Til-Canceled, and that's on you to manage. So if price doesn't quite come up to that $45 mark, or possibly might need to go even a little bit higher to get you into that trade, and it just starts pulling back, your order won't be filled. We saw here, big spike up. So we wanted to sell the 24 calls and buy the $25 calls for protection. But you can see price quickly fell off. And with getting filled, sometimes these are tricky where they'll even have to go a little bit higher than our strike in order for option makers to give us that price. Are you in front of the computer all day? Are you looking for a quicker profit? You'll have to manage out your trading system to what matches you. I'd rather go at a higher price and take less, but make sure they're good quality trades. And this is basically the difference in the risk level. When against resistance, this is probably the mid entry point. If you lower the GTC to enter, that just means your break-even price will be a little bit lower, which will probably get you into the trade. If you increase it by 10, 20, 25 cents, 50 cents, what you're doing is you're increasing your break-even, which then makes the demand that price will have to go higher to get you into the trade, which is okay if you think about it, because if you demand for it to go higher, you have to be patient and wait as price goes up. But while you're waiting, you're in cash. It's your money still. There's no risk, there's no loss. And at that point that it gets you in, it's probably peaked out so much that it's going to start coming down really fast after that, giving you almost instantaneous profits. Now on to GTC for exit trades. So on the alerts, buy to close, you'll have something that looks like this: $1.25, BTC, buy to close, GTC, Good-Til-Cancel. And in like the last example with the $2.50 to enter into the trade, we'll take profits at about 50%, meaning that price will have to go from the $2.50 down to $1.25 to meet that profit target to get us out. 0 is the max reward, meaning 100% if you're on a 1-to-1 trade. If you're conservative and want price to go higher to get you into the trade, then you might also be more conservative to take a quicker target of 20%, putting you at $2 GTC, Good-Til-Cancel, which basically looks like this. You got in a little bit higher. As price comes down, there's less demand to get you that 20% because you've already been patient. The more money you want to make means that price will have to go lower in order to capture that 0-0. 90% is definitely achievable, but it's more aggressive because you have a bigger demand on price going low. Kind of like we saw on SCR, sell the 22.5s, buy the 25s for protection. As price was shooting up, we sold the 22.5s and we bought the $25 calls for protection. It got us in the trade and worked out nicely. Score Media, we're up almost 60% right now. On Thinkorswim, you can highlight the area. It'll create a closing order for you. You can either do a vertical spread or you can leg out of each one at a time. I'm kind of simple. I like GTC. We already know that we're up almost 60% at 55 cents. We could just click confirm and take that money and find another trade. We could be a little bit more aggressive and demand 5 more cents. Change this from day to GTC, Good-Til-Cancel, and wait. If we did that, we'd be leaving $50 on the table. Like I said, 0 is the max amount of profit. And this is the great thing about time decay, because if you just leave the trade and it goes to 0, the option makers will close you out of the trade automatically, not charging you. Or you can leave some low form like 5 cents, which basically translates into $5, giving you an additional $45 on your profit. And that is the benefit of GTC. But just remember, your win to loss ratio is changing. You started out with a 1-to-1, meaning $100 risk to $100 reward. When you met the 50% profit, you now had $150 at risk potentially to only make a $50 reward. And what I mean by that is, even though you can capture $45 more, what if price skyrocketed from here? That means this $245 profit would evaporate. The other thought is, if I went ahead and took that 50% off of the table, that means I would automatically be able to find another trade giving me a $100 target instead of a $50 target. All of these little things add up when calculating the growth of your money. We don't have a problem finding new trades. You'll just have to figure out what is best case for your scenario. If you have a smaller account, you might want to take quicker good-till-cancels so that way you can rotate that money faster. If you're waiting for the max amount of money, that means you potentially have to wait for the max amount of time. And we'll learn more about that in the 1% rule. So now managing your GTCs. I like to make categories when entering into the trade, waiting to be filled. I create a search for that. I put all of those trades in here, STN GTC. So when I'm waiting for a trade to open GTC, because I want price to go up to 45 cents, and currently it's at 40 cents. Also, we'll have to review the trade setup. Am I still coming up against that resistance? If not, maybe I need to remove that trade. If so, then maybe I need to roll that out into the next month. When I place a trade, I put it into this category here and monitor it until it gets filled. Then I'll put it in the appropriate month. So here's that same list that we looked at before. So AGN came into resistance right here, and we put out that alert. RSI's been going lower, so that shows bearish divergence. Implied volatility stayed relatively the same. And this little move sideways from where we originally gave the alert has been 11 days, which from here only gives me 16 days until expiration. On ARVL, we were thinking price would come up into this resistance zone, but as you can see, the RSI fell off really hard, and also the implied volatility with price, so there's no reason to think that this is going to come back and get us into the trade. EH, we put an entry in up against this resistance. And even though price is coming up into that resistance, it's not going to be enough time to take a July trade. Look how low the implied volatility is from where we were originally anticipating. So we'll take this one off. Same with Loop, came into the resistance, divergence on the RSI, implied volatility is already selling off, but price is also so low. Could it come back and retest? Yes, absolutely. But we would have to look at an August option at that point. MVIS, head and shoulders pattern up into resistance. Price sold off, never getting us into the trade. Also implied volatility. Makes no sense to stay in this good-till-canceled trade. Let's take the money off and find a better trade. Thread up in this resistance area. Implied volatility stayed the same. So if price came back into this resistance, it'd be a good place to take the trade. But we would want a new trade out to August. Give us more time. Same with Wish in this resistance area. Fell off hard. This might be a good place to get into the trade, but we would want to have something all the way out to August to give us more time. Implied volatility has fallen off some, but it's still at 1.6. So when you've identified that the stocks no longer match the plan, take them off. Come in, cancel order, and now you have more money to find new trades. I'd probably only let a GTC stay open for a week or two because of the time decay that's happening on the option. It might be the right resistance area, but maybe not the right expiration month. There's always new trades coming up every day.